This is a futures trading guide for MEXC. I'm going to go through the platform right here and what we need to know. Towards the end, I'm going to go through a futures strategy just to try and read the market short term and maybe place some trades with your risk management in place as well. I'm going to go through entering long and short positions here, how to actually do that, and then how to analyze some of the specific futures related information that we need to actually know before placing a trade. I'll leave all of those timestamps in the description for you. First thing we need to do is get some funds into our account. I'll leave the beginner's guide in the description if you need that on how to get set up with the platform. I'll also leave a link to MEXC in the description. They will give you a bonus, a deposit bonus in your trading account. So when you deposit some funds on there, you can get some bonuses in both the spot and futures account. So all of that information is via the link below if you want to see that. Firstly, though, we need to transfer some funds from our spot account, which is where most people have them, into the futures trading account. I've already done this, as you can see here, but you can go transfer spot account where you have the funds, just click futures account and then the token you want to transfer and then press the amount that you want to transfer in. Transfer now. That's an internal transfer, so it's free and instant, and then you'll have some funds in your wallet, as you can see here, that you can go ahead and use to fund your trades. Most people will fund their futures trading account with a stable coin, but you don't have to. So depending on who you are and what you want to use to fund your account, on the left-hand side, what you can see is BTC USDT. So if we click on here, we can now choose the trading pair. So this one is Bitcoin, but you can see ETH here and then, a bunch of others, whatever you want to trade. But what we have here is USDT M. This means USDT margined. So this is a stable coin margined trading pair. So the asset that you use to fund your futures trading account is a stable coin, in this case USDT. If you want to go over to Coin M, you can see the amount of trading pairs falls substantially. So what you can do here is you can actually put the cryptocurrency coin onto your account as collateral to trade with. So some people do this. The downside of this is that if you had Bitcoin on account to fund your positions, you now have a risk asset on your account to fund your positions, which means that if you're long Bitcoin and you have Bitcoin funding your positions and Bitcoin falls, then not only is your position going to be in a loss, but then your collateral is going to be in a loss as well. So that makes things way more volatile. Most people will just fund their positions with US dollar tether because that will obviously, it's not a risk asset. So, the amount isn't going to change. And so that's how they fund their positions. Everyone can choose whatever way they want though. I'm just going to go with US dollar margined here just to show you. And then down at the bottom, that means that we'll be using those USDT that I transferred in to fund our positions. When trading futures, we have to also keep in mind the funding rate for each platform. Each platform does have a funding rate. The funding rates may differ depending on the platform. We can see all of that info here. So I'm sure you've traded spot before. We've got the price change on the day. Then we have index, fair, and funding right here, which is different. Now the index price is the price of Bitcoin traded on top exchanges. So think of the top 5 or 8 exchanges, whatever they are. The index price will be an average price of what Bitcoin is trading right now on those exchanges. You will see that it's slightly different from the price on MEXC Global. Different platforms have different liquidity pools, but they're all going to be within a very, very tight range. The fair price is important. The fair price is often known as the mark price. That's the mark to market price of the contract, because we're trading futures contracts here. So you'll see it called mark price on other platforms. The mark price is the official mark to market price of the futures contract, and this will be used for certain things. For example, if you're getting liquidated, or if there's a dispute or something like that, then the mark price, or they call it the fair price, is the official price that the contract you're trading is trading at. So it's important to know the differences. You can see there's a tiny difference between this and the open market price that you're trading at. So it's not a big deal, but sometimes if there's a discrepancy, they will go by the mark price and not by the market traded price right here. Funding rate's important. As you can see, long and short position holders are required to settle the funding fee every 8 hours. If the rate is positive, the funding fee is paid by people with long positions, people going long, betting on the price going up. So they pay that. Now, if the funding rate is negative, then short sellers will pay the funding fee. So that's really important to understand. So now it depends on the market conditions, what this funding rate is. You can see the funding rate is positive here. So buyers or people going long are going to pay this funding fee to short sellers every 8 hours. The reason this exists is because they want to minimize the discrepancies between the futures contract price and the underlying price, and there's a premium in here and a funding fee as well, like an interest rate, because many people borrow funds to trade. So this is what it is. As you can see, it's very small, but it's every 8 hours. So if we're putting 0.015 times 3, that makes a day rate of 0.045. If you times that by 365, it's coming out about 16%. So that's quite a high rate, right? So you have to factor this into your trades. If you're having trades open for a very long time and you're constantly paying funding, that's going to come out of your P&L. So sometimes you will pay this, sometimes you will receive it. It's positive when the market's going up, and it's negative when the funding's going down for the most part. The next thing we can do is decide how much leverage we want to use per each trade. You can set this once, and then if you want to go into a trade quickly, you don't have to change it. Up in the top right, you'll see isolated. I think it starts you at 20. If you're a beginner, please don't use leverage. It's going to wreck you. Now, I have other tutorials on how to use leverage, including an entire futures trading section in my crypto course, which goes through strategies and how to really manage this. If you want to know more about that, that's all linked in the description. But the main thing is, just turn this way down. Okay, 20x leverage is just nuts. So just turn it way down, maybe even like no leverage or whatever. Obviously, look, everyone can make their own decisions, but I can't recommend leverage, and definitely I would say, for people to not use it. But of course, everyone can do what they want, but you can change it here, right? So obviously that's your decision on what you want to do. Now, just to kind of tell the difference between cross and isolated. Isolated margin will isolate each and every position individually. So if you have a Bitcoin position, an Ethereum position, a Solana, whatever it is, you will have assets set aside to fund your positions individually. If one of your positions goes down and loses a ton of money, it won't affect the collateral that you have on other positions. That's isolated margin. Cross margin means that you just put a ton of assets on your account and they are used to fund all of your positions. If one of them goes south and wrecks everything, your whole account is going to get wrecked and your other positions will come out as well. So most people do use isolated. So you can confirm that. And then you can just confirm the amount of leverage that you want to use both on the long and short side. Press confirm. And then that will be automatic here. Down when you can press buy long and sell short, it will give you that automatic leverage without you having to change it. Now I'll go through entering both a long position and a short position, which is different to the spot market. On the right-hand side, I suspect you know what limit orders are and everything like that. If you don't, I'll leave some other guides in the description for you, and the MEXC beginner's guide goes through that. But I'm just going to click on limit order here, and you can click on latest, and then quantity, you can put that in US dollars or Bitcoin, whatever you're comfortable with. So, if you want to trade 0.5 BTC or something like that, you can very easily do that here. Going to save that for you. Maybe you want to trade $100 worth or something like that. You can also use the slider as well if you want. So that's simple, the same as the spot market. Now, time in force, GTC is good till cancelled, meaning that if you put an order in, it will stay in the system if it doesn't trade straight away until it's cancelled. IOC is immediate or cancel, meaning that if you can't do it immediately, like if the trade can't go through immediately, the whole trade will be cancelled. Fill or kill means that if you can't do the entire order immediately, it's going to be cancelled. So if you want to buy $100,000 worth of Bitcoin at 21 and the system can only buy 99,000 worth, then it's going to kill the entire thing and you won't get filled, half of the order or something like that. So that's those. Now, with futures, people often use take profit and stop losses. You can do that automatically when you're entering into the position. So if you want to very quickly just have a position here, you can click on this, and then you can see the take profit and stop loss price. So for example, if we're looking on the left-hand side, you can see the current price is 21,500, right? So if I want to go in around this level, I can just put that price in here, and then do an amount like $100. Then I can do stop loss is the main one. I can come down and say, where do I want my stop loss? Like if it goes down here, I get out of the position completely. It's going to sell me out at a loss, but it's not going to continue making a loss. So I may want the stop loss at, let's say 20,000. So put 20,000 in there. And if you want to take a profit up here at 22, 22,000 like that. When you go buy long, it's going to input the long order. So you actually open that position, and it's going to input two other orders, obviously a sell below and a sell up higher as a take profit level if it gets there, or a stop loss level if it gets there. Now you can do the opposite thing for short selling, but you can actually do ROE right here, right? So let's say the stop loss is 12% away, and you think that's that's big enough, and then the return on equity, we can do take profit 25,000, something like that, and you can see the works out the profit, so how much profit you would make if it gets there, and then you can just press buy long, and that would enter those three orders for you. A very simple strategy to follow with futures trading or short-term trading is just try to read the market. So I'll show you quickly how I would do it on here, just to try and read where price levels are. The first one I do is try and find a trend. The second thing I do is try and find price levels where I think the price might go to, dependent on what the trend is saying. So as of making this video, we're definitely in a bear market or a downtrend for Bitcoin. Now with futures, you can actually trade short. So if you're negative on the price and you think short term it actually may go down, then you can obviously do that in the futures market. So what I'm going to do is first look at the 4-hour chart. So I'm going to click on 4-hour here, and then I'm going to put some moving averages on the chart, because we need to see this. So I'm going to do moving average, and just kind of see what's going on the chart. I'm going to press this twice to get two moving averages up, and you can see them on the left hand side. Now you can change the styles on these because they're not very good. I usually use a 20 period moving average or a 50 period moving average, something like that, just to give me kind of a shorter term trend. So I'm going to put that on, and then the longer term trend, I'm probably going to use like let's call it a 100-day moving average. That's probably long enough for me. So 100, and then change the style a little bit, because the styles are always pretty rubbish when they actually put you on. So that's that. So now we have two moving averages. We have the yellow, which is a 20 period, and the blue, which is a 100 period, which is longer. Now we're in a downtrend, right? No doubt about that. From here, if you can see, definitely in a downtrend, right? So that's that. But what I want to do is confirm this downtrend by looking out a lot more as well. So I'm going to go up to the 1-day chart and have a look at this. I'm just going to zoom out a bit. Now we can see probably about almost a year's worth of trade, and we can see again that we're in a downtrend, right? So we can see both the yellow and the blue definitely coming down, and we are definitely in a downtrend. The price is trading underneath the 100 period moving average, typically quite bearish. We're also seeing the 20 period moving average, the yellow line, underneath the 100 period as well. So the short is underneath the long-term moving average, again suggesting a shorter term downtrend. Now what I'm seeing here is potentially the start of a bottoming out of the price, right? Because we're seeing the moving average just maybe slow down or kind of go sideways, and potentially even moving up. Now, what I must accept is that even though this potentially is positive short term, we are still without a doubt in a downtrend and in a bear market. And so that has to influence our trade. But what I want to do now is go back to the 4-hour and then see if there's maybe a trend or some areas where I would want the price to go to. So I'm going to go and look at support and resistance levels here. So this is a key support and resistance level. You can see that. So I would draw a line right here to give myself a potential level where trade might go to. Why? Well, because you can see a huge consolidation around here. That is consolidation in the price where it moves sideways, and that is a key level. Just happens to be 30,000, which is where humans trade. Now, this level down here as well, I can definitely see an area of support, right, where the price came down to and bounced off. And so these are key levels that I've got already. You can see we bounced off of this. Okay, so that's really the two levels. Now we have to decide whether short term we think that the price is now going to break down through this level again, and so we can go short, or whether it's actually going to stage a rally and potentially try and find some new levels on the chart where it's going to hit higher highs and higher lows, so we can use that trend to actually go long. And that's something we have to decide on at this point. Also on MEXC, there's an order calculator that I would suggest you use when you're trading these. So on the top right, you can see calculator here, and this can let you know if a trade is worth going in. So the opening price, 21,500. Like this, closing price, we could put 23,000. And then filled amount, let's say 1 BTC or something like that. And you can calculate, you know, what's your margin used, what are your earnings, and how much is the yield, and things like that. You can also do a target price. So if you want to make like, you know, 12% or something, you know, what would be the target price be? Liquidation price, really important. So if you open at 21,500 and you're using a ton of leverage, you can actually put the leverage up here. You can see where your liquidation price is. Your liquidation price should be nowhere near your stop loss price. If it is, you're using way too much leverage, and it's going to obviously you know, cost you a lot to get liquidated. So you have to check all of this before going into your trade as well. If you want to sign up for MEXC, I'll leave that link in the description. They will give a deposit bonus and other bonuses as well, depending on what you do. So check that out via that link. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.